Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Amid heightened inflation, rising healthcare costs, and recession risk, F&G, a leading provider of insurance solutions serving retail annuity and life customers and institutional clients, conducted a survey of Americans age 50 plus to learn how they are thinking about retirement. Joining me to discuss their findings and its implications is Chris Blunt. He's the CEO and president of F&G. Chris, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be here.
Let's start with what the key findings from the survey were. What were some of the most surprising takeaways?
Yeah, the one that jumps off the page, obviously, is inflation. 80% of survey participants are worried about inflation and the impact that has on their retirement. Another 71% were worried about recession. I guess you could say those are not surprising, given that that's been in the headlines, but another 2/3 said that they were worried about rising healthcare costs and that impact on retirement. And then lastly, another interesting finding from my perspective, over half of the participants feel that they're going to have to work at least part-time to fund their retirement.
Yeah, it's interesting that the survey found people were planning to work at least part-time in retirement. Is that all out of financial necessity, or were there other reasons folks plan to or are working part-time in retirement?
Yeah, there was a segment, maybe 40% or so, that said it was really because of missing the social aspect of work, which is understandable. But more than half said it was a necessity, that they think they're going to need it financially. And I think it points out the need to redefine what retirement is and stop thinking of it as I do nothing, but thinking about it as truly financial independence, so that more people can answer, I'm working because I want to, not because I have to.
Based on the survey, what do you think is the biggest missed opportunity for American investors age 50 plus?
Probably the largest from my perspective is just the not taking advantage of risk pooling. You know, annuities, for example, not only take longevity risk off the table because most people don't know how long they're going to live, they're just more efficient. You can generate the same amount of lifetime income with about 30% fewer assets being tied up. So I think that's a missed opportunity. I think you've got a number of folks that are still too reliant on pulling money out of mutual funds and stocks and bonds. And we've seen with the volatility that's taking place right now, if you do that at the wrong time, those assets can be depleted pretty quickly.
You mentioned before that respondents noted rising healthcare costs as a worry when planning for retirement. Do you think the recently passed Inflation Reduction Act will remove this concern?
Yeah, it should help somewhat at the margin, but as you know, those are limited dollar amounts of benefit to people. So anything I think is helpful. The open question for everybody is, will this in fact help to bring inflation down, or will the cost of the program over time contribute to inflation and therefore claw back some of those benefits? And the reality is we just don't know at this point.
With current economic conditions, is this a bad time for someone to retire? If you're nearing 65 now, would you recommend that they hold off for a few years?
Yeah, it's a tough question to answer without knowing the particulars about someone's needs in terms of their income. I would say if they are solely dependent, again, on pulling income out of a mutual fund, their stock fund, or even individual bonds that they might have to sell prematurely, then no, it's not a great time because most assets are underwater still at this point. But again, it's really going to be dependent on how much someone has saved and if they properly thought about how long those assets are going to have to last.
What financial products are Americans over 50 relying on as they approach retirement?
Yeah, the biggest ones are the ones that I mentioned. Well over half mentioned their stock portfolios. 75% said savings accounts. Both can be, play a really important role in someone's retirement, but both have limitations. Stocks, we talked about the volatility. Generally, you want to use stocks for dollars that you're not going to need for at least 10 years, not, income you're trying to pull out today. And then the challenge with savings accounts, even though rates are up, as you know, most savings accounts still pay less than the annual inflation rate. So there needs to be a mix of assets in most portfolios.
And Chris, to wrap up here, 65 today looks very different than 65 of generations past. So does longevity risk factor into how Americans are approaching retirement?
Yeah, absolutely. And that's the big one. You talk to retirees, which I do. That's probably the biggest surprise for them. Just weren't anticipating what a long life they would have. if you make it to 65, the odds are really good you're going to live into your 90s. And if you're a couple, one of you for sure is going to make it into your 90s and well into the 90s. So yeah, I think you have to have an answer for some form of longevity protection.
All right, Chris, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.